All right, welcome back. So in this section, I'm going to show you what you need to know about volume, the volume indicator, right? How it works, and what you need to look for when you're using volume in your charts and in your trades. So let's get straight to it. You should know by now, if you want a new indicator on your chart on TradingView, you just simply hit the indicators tab and you just type in the name of the indicator. What to look out for, though, there are a lot of indicators that get published. It's really great, but it can get a little bit confusing. So here we have, you just want volume, right? You don't want 24-hour volume delta, and none of that. You just want volume. You select it, and this shows up, under your previous indicators like EMAs and stuff. So it's on this tab. Really, I don't mess with the volume settings. This is fine. MA, moving average 20, that's okay with me. But yeah, it's another pretty simple concept to grasp, but simple but very, very powerful. So if we look, let's see if we can find a decent pump in price. Okay, so here we have this histogram below is the volume, right? So this will show you, and if I click on this, it'll show you that there was $329,000 worth of buying in this particular candle, right? This is how it works. So every candle that gets printed, the volume histogram follows. So let's look at this price action here. Okay, so as you see, we had a pullback in price, and you see the EMAs, the 9-day EMAs just started to cross over the 20-day EMA. We're right on the previous resistance line. Then also, if you look at the MACD, at the beginning of this candle here, and this is the 1 hour chart, by the way. I'm looking at XRP 1 hour chart. So each candle represents 1 hour of price action. And as you see, the MACD had a solid indicator that we were going to go, in a slight uptrend. Okay, if you're day trading, you can use this as an indicator to get in, go long here, take profit at previous high right here. Easy winning trade, right? There's so many ways that once you understand these fundamentals, there's so many ways that you can develop your winning strategy, and that's exactly what we're doing here. Just teaching the knowledge so that you're able to do that. But okay, so sorry, I went a little bit off track there. So as you see, the 9-day EMA, the blue line, is crossing over the orange 20-day and also the 200 EMA line, right? So this is a good indication. But as you see, the MACD kind of had the crossover a bit earlier, right, on this bearish candle. Okay, so the MACD started to cross over at this point, and as you see, both lines were sloping upwards. Okay, both lines were pointing upwards, the 9-day and the 20-day. But then alongside of that, if you look at the volume, right, so every candle, there's a volume histogram that represents basically what's going on in each candle. So this was the amount of volume that was in this sell. Like this is sellers, right? Red candles are sellers. It's a bearish candle. So pretty moderate, pretty steady volume coming off of this sell. But then when you look at the candle, right after it, we had a massive push in volume. Okay, like a massive push in volume. And we're talking, this is a big jump in volume. So just looking at this complete setup, the EMA line, the MACD, and then when you see a major push in volume like this, you can expect, you know, a pretty big candle to form, and, you know, possibly a decent breakout, or, you know, a decent retest to our previous high, as you can see here. Okay, but, you know, volume is just something really useful to understand, because again, you know, it's indicators that kind of point you, you know, show you the direction that price is going. So, you know, we have here the 9-day EMA starting to cross below the 20-day. Now, maybe you're not sure if it's just going to touch the 200 EMA line and bounce back up, but that's why it's so important to know what to look for. Okay, so we had a break below the 200-day EMA, then we had to pull it back straight up, right? So it didn't break below for long, but then it pulled right back up, and then as you see, there's just a lot of selling pressure, and then when you get to this point, this is a massive amount of selling volume. So the simplest way to put it is that the volume indicator, it simply shows you the amount of sellers and buyers that are taking place in any candle that's forming. Now, you know, candle can turn green and red in the same price action depending on the time frame that you're looking at. But again, this is a really useful concept to understand, because it'll paint you a very clear picture of what's going to happen next. You know, here we have high volume in sellers, and price continued to move downward. So that's pretty much, you know, the simplest way that I can explain this concept, is that, you know, there was not a lot of, you know, the buying volume was very low, then you had a massive amount of selling volume. Price is more than likely going to follow that trend and go down more. Vice versa, we had some selling volume here, but as you can see, there is more buyers stepping in at this point. So that's why from this point we had a good retest to the 200-day EMA line, which is the resistance. And, you know, you follow your EMA lines, you follow your MACD. We had a crossover here, getting over the zero line. You know, there's a lot of buying pressure being shown on the volume indicator, and just like that, you know, you can get in at this point and you have a nice uptrend. So that's pretty much it. That's volume 101. So one thing I wanted to add, which is pretty much a gem of an indicator, right? It's called parabolic SAR. Now this is just a little bonus that I want to throw in here. So when you select parabolic SAR, you're going to see these series of dots, right? And you can change these, like, you know, you can change the style. I don't mess with the increments or the max value. I leave this at default. You can change this to cross, whatever kind of shape, circles. So now we have circles, right? But very quickly, it's just another, it's more of a confluence. As you see, whenever these parabolic SAR dots form above the price, so above the candles right here, so as you see, they're forming above. That means price is more than likely going to push down. Okay, and then vice versa, whenever the candles are, you know, below the price, sorry to swear about arrow, but so the circles are forming below the price. That means price is going to be on its way up. But you should never use parabolic SAR on its own. It needs to be coupled along with EMAs, MACD, or, you know, volume. It's a further confirmation. It's a very cool indicator, very easy to understand. If if the SAR circles are forming above price is more likely going to go down. If it's forming below, and if you look at the price action, your EMAs, you got bullish candles, more than likely you're going to be in for a decent uptrend. And as you see, we had strong buy action here. Parabolic SAR circles formed below. We had a simple retest and right back up to a very good upward trend. So yeah, that is pretty much it. We've gone through EMAs, MACD, volume, parabolic SAR. So this right here, this finished product that you're looking at with all of these indicators, that parabolic SAR can be optional, but it's just good confirmation. This is pretty much like the number one starter pack for your charts. So you master these and you get these down, this will change the game for you. But yeah, well, that's it. And I hope I provided a lot of value and some solid information. Thank you.